Every registered taxpayer has to do their annual compliance once a year. You have to compile your GST data and file your annual return. We call GSTR-9. Now the question arises, what is GST-9? Who has the mandate to fill? Are there any tests? What are the registers that we should maintain so that we can meet our annual compliance? And what are the consequences if we do not file GSTR-9? Let us discuss in detail in this video today. GSTR-9 for the financial year 24-57 is such an essential register which we should maintain. Domestic Register, Export, Inward, Import RCM, Advance and Stock Register. These SCMR have to keep accounting so that we are our annual company. Lines can be completed. If you are an accountant, a businessman, a C student, a GST learner, a professional, then this is a detailed, comprehensive video where we will understand all the concepts from basic to advanced. Before filing the GSTR-9 form, I will come and pay so that it is easy for you to fill it. Concepts. Do you know if you will be able to fill it? What are the changes for the financial 24-25 will be discussed in detail. So let's start today's video. Hello friends, my name is C.A. Devesh Thakur and today we will see GSTR-9 Annual Return for the financial 24-25 section 44. Annual return has to be filed now. What is annual return? Annual returns, we have given an ultimate opportunity to taxpayers so that they can correct their mistakes. Mistakes mean omission or mistaken where have these mistakes or omission or our GST and 1 and 3 way. For the financial year 24-25, if I have filed monthly or quarterly. So during that financial year, if I have any commission while doing any reporting, I have forgotten to put any entry of sales or I have shown short or excess, then I can rectify that in this return. A last chance has been given. Now what do I have to do first to fill this data? All GSTR3 of that relevant financial year also. And close it has to be filed. This is ours. Consolidated data is consolidated means the data of the whole year in a summarized form. My GSTR-9 has been fetched on my GSTR portal. Now I will cross check it, verify it and my books of accounts and which was already filed data or I have supporting documents. I will revisit all three of them. After that, I will file my annual return. Section 4042 says that if my relevant financial year is 24-25, which has two dates, 3/1 and 2/2085, this will be our 2 dates. From here, if I count the coming 3 years, till then I can file my bilated GSTR-9. But why do we go to interest and penalty? We will file before the 2 dates. If I can't, I will be given 3 years. For the financial 24-25, I can fill up till then. Notifications are also issued. If I don't do it in previous financial, the government turns off the wave. Normally, but we will not go to that scenario. We will file before 2 dates this year. Now, it is not necessary to fill GSTL9. Non-resident taxpayers ISD is a taxpayer registered under GST or TDS. If I talk about composition, then composition is applicable for dealers. 9 is for A and normal. 9 now during the financial year 24-25, if I have said opt-in means I was normal taxpayer. By opting in, I came into the composition scheme or I was in composition scheme and now I became normal taxpayer. Then in this case, I have to file 9 plus 9, 8. Then I will have to file both. If I am crossing that threshold limit, now if required to file 9-6. If my audit is also mandatory, I have to fill 9 first. After that, I will talk about and if I filled it once. If revision is not possible after filling 9, then he will file the last chance given to him very carefully. All the reconciliation, all the statements, all the registered books of accounts. We will file our GSTR-9. We have seen that every registered person has to file an annual return under section 44. But what happens if I say that my turnover is less than the limit, then I don't file and the government pays for it? Exemption issue is done every year via notification. Notification number 15/2025 was issued on 17 September 2025. Does she say that the Commissioner, on the recommendation of the Council in respect of filing of annual return for the financial year 24-25 awards hereby examination to the registered person? Whose aggregate turnover in the financial year is up to Rs200,000 notification is issued every year. So for this year financial 24-25, if my aggregate turnover is less than 200,000, then I have the option that I do not cover it, that is exportation mill site. What is the biggest source we have to file GSTR-9? That is MRS section 35, which talks about accounts and order records. Only after looking at accounts and records I file my GSTR-9 accurately. What does section 35 say about me accounts? Where do I have to maintain true and correct in my principal place of business where my GST certificate is issued? If I have multiple locations, I have to maintain our books of accounts at each location. If I am not able to account for it, then from section 703747.4a. Demand and recovery proceedings can take place. Now, Rule 56 tells us which accounts we have to maintain by a registered person. Now, analyze it a little more. First of all, if I say that the data of my box of accounts, is that my GSTR-1 which I had filed where there is only talk of outward supply, and GSTR-3B where I pay outward, inward and I pay tax. Do these three match? Is my VAN equal to 3? If not, there are two cases. The first case is that I have paid tax short. Now what will I do? I will declare it in GST and pay it, or I have paid access tax, and if I become eligible I can also file a refund. One special thing related to ITC, at this GST at 09 talk I cannot reverse ITC nor can I create a new one. If the registered person wants to reverse it, then he has to reverse it only through DRC 03. The first register is our domestic sales data GISCO, we call outward register now. I know from this register which document has been issued. Is it tax invoice, bill of supply and debit note, credit note? Which document has been issued? He has to determine. I can tell him from the outsourced register which of these invoices I had issued. What was this supply like? My export was B2B, B2C with or without payment. Supply to XZ with or without payment, or then supply to RCL. My out for register provides me with all this information. Now let's talk about the place of supply. There is a different case of goods and services in the place of supply. In the case of goods, section 10 tells us that movement of goods took place there. If there is a movement of goods, then where that movement ended and terminated, we will call that place. Place of supply. Now take another case where there will be no movement of goods. That is, if the goods did not go from one state to another or from one place to another, then what will be the place of supply? Then the place of supply is the location of the goods wherever we delivered it. Now the services section, section 12 tells us these two things, that if I have given the services to a registered person or to an unregistered person. If the location of such party is given to the register, if the location of such party is given to the unregistered, do I have its address? If there is address, then location of true person, and if there is no address, then location of supply. Such we determine the place of supply. Why is it important to determine the place of supply? Because the tax I have to levy is CGST, SGST, UT, GST and IDST. He depends on me. If the place of supply in the place of supply is intra, then I will charge CGST, HTFT. If it is interstate, then I will recharge IGST. Then this is our important concept. In the case of place of supply of goods and services, both have to see where I have to deliver which tax. After that, if we talk about which data we'll get from this output registered, composite supply or regular supply. What is composite supply? Composite supply is one where there is one principal supply and one supply. Principal supply means a main supply with which another product is associated. There is a product that is given at normal cost along with that product. It is not sold separately in the market. In the composition, we say that if my principal is a main item due to which I give the other item along with it, because normally it would not be sold out separately, we will tell him, naturally Bunder. What is the tax rate? Tax rate seems to be the main supply of the main supply. Can they both be sold? We are not separate, but in the normal course of business, which is a key day-to-day activity. In a normal scenario, we don't solve them separately. Now there is tax rate in mixed supply. What do we do in mixed supply? They used to club 3 or 4 items. And we also make a basket of them and give it to them as a gift hand. What's in it now? What is the tax rate? Most of that basket is the tax rate we charge. Now 12% of the support in the entire bucket is removed. 5% and 18%. If 5% items and 18% items come in mixed supply, then we have to charge only 18%. Now regular supply is our normal supply. Now talk about time of supply, place of supply, what we had seen, which tax I have to levy. Levy means I will impose IGST or CGST, HH, GST. Time of supply tells me when my liability will start. Section 12 deals with the case of goods. My date of invoice or deemed date of invoice is what should have been the last date of issue. Would have been, should have been. This is what section 31 says in the case of goods. Should it have been a date? Last date or date of invoice of both of them, or date of receipt of payment earlier of this event. If any event will be done first, from that day my circle will start. What was the place of supply determining which one to levy tax? Time of supply will tell which tax that was levied has to be paid from when. Now section 13 talks about our services. In the case of services, if I issue the invoice in a timely manner, I will take care of the case of services. Date of invoice and date of payment if invoice is issued in a timely manner. If the invoice is not issued, then the date of provision of service or the date of payment. If both of these are not applicable, then date of receipt of service in books. When did I show in the books that I received the service? If you want to know about these three scenarios in detail, then our GST course is going to come very soon. The full video will be available on YouTube. I am going to launch both basic and advanced courses of A to Z GST very soon. One by one section, one by one provision, one by one case, which are important cases. They will also discuss a lot of MCQ concepts. Theories will be discussed in a lot of detail. Stay on the channel. Until now you have not subscribed to the channel. Please subscribe to the channel. Then comes our export register. Now what is the export register? Take the case of goods first. Section 2, Section 5 tells us when do we consider export in the case of goods. What if I have issued an export invoice when goods are taken out of India? Should I assume that export of goods has taken place? My issuance of export invoice. If I issue an export invoice, it does not mean that I have exported. How do you take a scenario? A purchase order has been received for a person from Delhi that he has to supply 500 basmati rice to a person who lives in Punjabi Bagh. Received the order. From outside, I also issued an export invoice from a foreign country. I also got money in foreign convertible currency. I also received the dollar. So, would I call it export? Leave a comment, not the first thing. Where was the movement of goods? When this happened in our taxable territory, the place of supply became mine, Delhi. First of all, secondly, the terminal in the goods store took place in Delhi, never went out. That is, I will consider goods outside India as export in the case of goods when my goods go outside the territorial boundary of India. Sales does not qualify. Export is the table number 6A in GSTR-9 where I say the details of the invoice. There won't be an invoice there. If the goods remain in India, export invoice is issued, payment is issued, even if it is not called export, then these are a lot of concepts. What you will also find interesting in GST, and you should also know about export or domestic. For GST learners who are watching first time videos, there will be a lot of new concepts. Something that you will like, and you will also get deep concept knowledge that yes, this also happens, then definitely watch this video till the end, and our GST course is coming very soon. You will also wait for that. Now rule number 19.6. In the case of goods, you must know this rule if you are exporting or want to do it. Now what does the rule say? Rule, it says that I have supplied the support without payment of taxes of goods. Why is it that I am going to ship goods out of India without payment of taxes? There are two scenarios where I go through bond or lot. The bond or lot, you file your RFD 11, through which you give an undertaking to the government. You get the binding that I will export. If I can do it, I will pay interest along with tax. Now, what are the conditions that the government is giving me so much relaxation? I will export only on the basis of my declaration. Not so. What are his conditions now? First of all, let's see case number 1, where you do not export the goods. I filed lot A. In lot, I gave a declaration that I will export goods this year. I issued an export invoice. Now for 3 months after issuing that export invoice, I did not send those goods out of India. There was no problem. After that, there are 15 days. He should pay both tax plus interest to me within that 15 days. Case 1. Export invoice issued, but goods not sent in time. Tax and interest apply. Case 2. Goods sent but payment not received within 1 year means tax and interest obligations. GST specifics define timelines clearly. It can be more than this. Then I have to pay tax and interest within that period. The goods did not go, the goods went, but the payment was not received. What happens now? If I go to the GST portal and file my GST return, then my data goes from there. What data goes on an ice cube? My invoice. I say that I have exported. Now I have exported. That data is verified from my shipping bill. If my GST portal data does not go to iGate, is not transmitted, then I receive an email of non-transmission. Non-transmission means that the tax I have paid in my 3B is less. As much as I reported in VAN, this is one of the major reasons due to which you must have received your non-transmission email. Then you can rectify in your VAN and VAN properly made VAN any shipping bill or any date or port code. If there is any mistake, then your particular invoice will be there. Will not be transmitted in IceGate so that you will automatically get a refund sanction. So exporters brothers, whatever you do, whatever reporting you do, just make this column which belongs to you in 6A, make it properly in GSTR VAN and pay the same amount of tax in 3B. Every time you file your GST return. Now let's talk export of services. What does our services say? There are 5 conditions in the case. You need to follow these 5 rules. Then I will say that I exported the services. What happened in the case of goods? The goods should go out. Now what is in the case of services? There are 5 conditions. What is the first condition? I assume that Devesh Thakur is a supplier who provided services. So what is the first condition? That my supplier should be in India. Second, I provided services. Who is my recipient outside India? Outside India means it was in Canada. I provided services to it. Located outside India, the third place of supply should also be my outside India. I need to receive the payment in convertible foreign exchange. I also receive money in dollars, but sometimes RBI. Permit that can also be received in INR. This was the 4th condition. What is the 5th condition? 1 and 2 i.e. The supplier and the recipient should not be a mere establishment. One guy does not mean my branch. The other one should not be connected to each other then in supply of services. I will accept it when these 5 conditions of mine are satisfied. How does import registration help us? This tells me that if I have any services that I have imported, if I have given consideration to it, if the consideration has been done, then whether it is for business or personal, I will call it import of services and I will charge IGST on that import of services. Now the invert register is now the first most important for the invert register. Our section number 16, which tells us that the eligibility and conditions of ITC. First of all, section 16 subsection 2, because it talks that I should be in the SA registered person position whose invoice has been issued by my supplier. Now the same supplier has uploaded the details of the invoice on the GST portal as well as made the payment. The goods he gave should have actually been received by me and the reporting he had done should also be reflected in my 2B. My GRM in the case of goods and in the case of services, I had entered it in the books of accounts on the same day. Now the recipient, if you have also filed GST returns, then these are the 5 conditions due to which I will get my ITC. That is, eligibility conditions are these. Now when do ITC reverse have to be done? Understand its relevant sections and rules where we will reverse ITC. Eligibility conditions were included in our section 16 subsection 2. Condition: what was the first register? A person must have a document. The supplier will report the invoices they have issued on the GST portal. Corresponding should reflect in our 2B. The goods he supplied should be received at actual. How will the reception be? There will be documents, there will be some proof of the services. If the fourth supplier has paid the tax and the recipient has filed all the returns under section 39, then it will be that our eligibility conditions now talk. Reversal is also as important as a claim. Second provision, section 69, section 2 tells us that pay bill. So that supplier within 180, we have to make payment to our supplier within 180 days. What does advice rule number 37 say to reverse ITC for non-payment to supplier? In 180 days, we will have to reverse that much ITC. What is the scenario now? Is the registrar person and the supplier issued the tax invoice which had value plus tax. Now the registered person has claimed ITC on the basis of that invoice, which is now being spread in the team today, that if he cannot pay the tax plus value in 180 days, what will he do? First of all, reverse ITC proportionately to the unpaid amount. Calculate proportionately what you have not paid and reverse it. You can do a repayment, that is, take ITC again when you pay that supplier. But if it is not done within 180 days, then do not forget to reverse. You have to pay with interest. Then there is no time limit for reappointment like in the 16th 4 that I should issue by November 30. There is no such time limit in the case of reappointment. If you do not pay within 180 days, I can always refund you. Then talk about rule number 37A, reversal of ITC in case of non-payment. Now in the case of non-payment, one of my suppliers filed GSTR-9 but also did not file GSTR-9, which includes payment of tax. What happens now? Now in this case, if buyer like I am buyer, so I have to reverse ITC by the next falling year by November 30. If my supplier does not pay tax, then I can claim him later. Reclaim when he pays tax. Rule number 38 is our banking financial institution. For institutions and NBFCs who opt for special options. Under section 74. And they do not do normal ITC assessment, which says 17.2. What happens in this case is that they can only claim 50% of eligible ITC. Every month after exclusion non-business and block credit, you will claim 50% of the remaining balance, except block credit and non-business ITC and 50% of the remaining balance. His reverse to 3B. This is our room 38 says. Next is our rule number 39, which is in the case of ISD. What happens in this? The head office distributes what happens, the main office distributes what happens. ITC of services used by multiple branches based on dot. The turnover issue is receiving a main office services, receiving billing, but it doesn't deliver. Who gives the output? His branch now breaks down and distributes the ITC that has been saved by the main head office. One of the bases of turnout. First of all, what is distribution? Monthly this ISD has to file its GST. Now distribute type files means type files. He will separate out of that ITC, eligible ITC and these eligible ITC as well as tax wise. Same status then, C GST, S GST has different status. And IG will adjust debit note and credit note along with ST and the same. After that, he proportionately distributes his branches on the basis of his turnover, which will be received at ITC head office. Roll number 42 speaks to us. Determination and reversal of ITC. You first determine and reverse. Fair allocation of ITC where goods or services are used for booth, flexible example, business or personal. I have some ITC standing. I had also done business purposes out of that ITC. Taxable supply was also done. Exempt supply was also done. So in those cases, I have to determine it, and let's see when to do the reverse. On a monthly basis, I will remove my total ITC. Among them, these eligible ITCs come in which scenario? One comes in our personnel and one comes in our exam supply. We will calculate common credit, then reverse. If I am supplying the exam of proportionately ITC, then I will also reverse my proportionately ITC related to it and use it for business. It wasn't. My non-business was expendable, but my IT is reflecting in TC. In that case too, I reverse it. What should I do yearly? I will recalculate my ITC again. If I have any access or short there, I will adjust it. If I have a short, then I will also have to do interest. Paying this applicability, where the applicability of my interest comes, I will also have to pay interest. Now Rule 43 states the determination and reversal of the manner of the capital goods case. Of the capital goods case, I will see in the case of the capital goods case, if they have been used for party taxable and party take activities, then normally I will take a useful life of 5 years. I will apply the formula. I will distribute common credit evenly in 60 months. If there is a case of real estate, then I will make my final reversal adjustment when my project is completed and interest applied if reported is there. If I am late in reversing, I also have to pay interest. Just don't reverse that component. Do the calculation of interest, otherwise you have to pay more interest on the time of assessment. 195.175 says, I have to apportion of credit or block credit. Apportion means I will break that part. That part that was not part of my business work but is reflecting in ITC. Block credit doesn't mean I'm allowed such credit but still reflecting. It was blocked, I didn't have to take it. What do you mean? If there is a mix of it, I will break it out. What is not eligible for me, I will cite it for business and only claim the eligible one, and I will claim the business use one. Whether it is personal or non-business, I will not claim it. Taxable examples. I will not do construction of movable property. Food insurance, travel and clubs cannot do acceptance when they are compensated or they have been responded to. I can do CSR. This personal use loss cannot happen. In the banking case, we had just seen the rule where I have the option to claim only 50%. Section 8, ITC in special cases. Fresh registration activates eligibility starting November 1st with turnover threshold limit on November 1st. It enables ITC claims on pre-existing stock like imports, semi-finished goods and books. It starts with, I had a cross on October 31, now I am eligible from November 1st to take the registration. Under GST, if I apply within 30 days, let's say I have applied on November 13, 2025, and GST certificate is issued to me. So I will become eligible. Which ITC to claim ITC? I can claim ITC of the stock I had 1 day ago. That is the stock I had 1 day ago. Import semi-finished finished books. Now if you look further at section 18, it is also the same in voluntary registration. From the composition scheme, if I am going to regular pay, then I can take ITC. From exam, it came to taxable pay, meaning I used to sell such goods which were exam. Now they were taxable at 0 first. Rate changes on taxable goods, e.g. 0% to 5% or 18%, impact ITC claims. Since September 22, movement between taxable and exempt categories affects ITC eligibility, like reversing ITC upon switching from regular to composition schemes. In that case, I have to reverse ITC from regular. I went to composition. I have to reverse ITC. Sale happened. Merger happened. I can take ITC. In this sense, I have to transfer ITC. If there is no question of reversal here, then this section is ours. The IT of special cases refers to SC. Now comes how did the RCM means reverse charge mechanism of our RCM register reverse. First understand normal charge mechanism or forward charge mechanism. I am a supplier. I supply good to a recipient. I issue a tax invoice in which I show the taxable value plus charge GST from it. Okay, now I pay the GST that I collected from the recipient to the SA supplier government through my GSTR-9. What is the reverse scenario?
Reverse charge mechanism, RCM, differs from the forward charge mechanism. Under RCM, the recipient instead of the supplier pays taxes directly to the government using GSTR-9. Supplier invoices only show taxable values.
Generate by AI.
The recipient will pay in RCM and the same will be done on pay plus claim. Claim will do the same. In the same GST return, he has to show his liability only in 3V and he will claim from 3V only. Nature of supply will cover our sections, which we just discussed. Now, according to the Stock Register Route 56, if I am receiving or supplying any goods, then what do I have to take care of? Opening balance is so recent supply goods to destroy, return or dispose. Raw material, scrap and wasting in free sample invite, All these particulars being in the stock register in retail, if I am a registered taxi pay person and I am filing my annual return, all these are useful to you, and you also have the support of these particulars in case of audit.
Must be. Advance register is the concept of advance register in GST. I have received advance inside. I am the supplier. I had to give goods or services. Some receipt advance me. Now understand the scenario of both goods and services. A lot of people are confused. Understand the basic concepts in an easy way. Advance, I can get reception in two scenarios. First of all, in the case of goods or service goods, there was a modification in starting that if the turnover of a registered person is up to 150,000 and he receives advance, he did not pay tax on true advance after that. A further notification came. On November 15, 2017, all registered persons were discharged in the same year. I mean, now it has been made free. If I receive the advance for what in these cases of goods, then I should not pay tax on it.
But this is not the case with services. In the case of services, you also have to pay tax on the advance, which you show in your GSTR-9. GSTR-13D will discuss all these concepts in detail when I will bring with you my basic course and advanced course soon. Stay! Let's talk about advance with me now. First of all, if we see how much advance I had in starting the year, I mean it was last year. Last year I had a reception. For this year, I go on assuming that 1951,000. If I have opening balance, then this does me. For the financial year 23-24, this current year, our 24-252-4-250, I received an advance of Rs 56,000 and I will make some adjustments. I will make adjustments if I issue a tax invoice from the advance I received or refund that advance, which is in normal business. If I have received any advance, I might have to go back. I did not supply or found another supplier later. In that case, I have to pay back. Now I have issued tax invoices from this time out of Rs 37,000, now Rs 56,000. I was disturbed this year. I have issued tax invoices for 49. If I have to refund the rest, then I have it in the closing balance. Rs 59,000, you have to maintain the register. If you receive advance in the request for services, now the concept comes, you can also fill GST or 9 nil. Will anyone now say, brother, you didn't cross my turnover limit? Our turnover is up to 200,000. If my limit is not being crossed, then why am I filing a nil return? This is for the cases where I take them. A case register is the person. The principal is the place of business. Delhi, its pan-India turnover is above 200,000. What we have to see turnover is pan-India. The limit of GSTR-9 is 200,000, which we are calculating after adding every state, i.e. every GSTN. Let's say GSTN was in Maharashtra, it was in Gujarat, it was in Haryana. Apart from this, it means that apart from Delhi, there were 3 more GSTNs, but let me support the one in Haryana that it was taken 1 day ago or 2 days ago or even 6 months ago. There was no transaction. How? There is no sale, no purchase, no liability, no claims were made, no orders were accepted, no refunds were issued. 2 is the relevant point of 3. Now, if this is not all, then I can do my new GSTL-9.5 for this GSTL. This is the issue. A lot of paper comments of nil return come. The question arises, sir, if I do not have the limit, then why am I filling GSTR-9? So this is the most important reason when I file my NIL return. Maybe I did not have any transactions in 1 or 2 states which have GST, but that GSTM is active and the total of all of them is oxidizing my threshold limit. Now let us take a case where Mr. Verma's GSTM was cancelled. In the same financial year 24-25, he filed his final return GSTR-10 if you are listening for the first time. Regarding this final return, GSTR-10 is one of our final returns where I have to fill it after business close. How to fill in the entire detailed course will be discussed as well.
If my financial end happened on March 31st before the end of the year, the cancellation order also came before that. I also fill 10, then I don't need to fill GSTR-9. Otherwise, I have been cancelled GSTR-9 even too. I will have to fill and the eligibility to fill should be ours. Which sequences are most important? Why do I have to fill it? How long do I have to fill it? Equally important is what happens if I don't fill it. If I am eligible, the liability on me increases by 9 and I do not fill, then I may get notice. Under section 46, he says that the officer will issue a notice to me. Within 15 days, they will tell you to fill the return in the manners or form described. I have to fill in my GSTR-9 within 15 days. Now you can also fill out the without notice. Fill in peace before the due date. Why do you wait for the notice? If you can't do it, then you fill it late, then there are some late fees. Late fees are our turnover bifurcated. If the turnover is up to 500,000, then meaning CGST Rs25 and SGST Rs25, then the total will be Rs50 as long as the default continues. There is also a maximum cap. Our 0.02%, i.e. in totality, will become 0.02 plus 0.0, i.e. CGST and SGST or UTGST. These of turnover in that state of union debit, we have put the maximum cap. Now if my turnover is 5,000 to 20,000, then 50 plus 50, and the maximum turnover is the same. If it is 20,000, then it becomes 100 plus 100, and here pay 0.25 will become 0.5. So this is our maximum cap and minimum late fee if I do not file GSTN line timely. However, you have a section of general penalty, 125 here up to Rs 25,000. We might get a penalty. If I do not make any complaints, then basic understanding about our GSTR-9, where we covered all these points. What is the annual return? What is the date? All these registers have been made, sections have been made, rules have been made. Why do you feel nil then? What are the consequences? Let's discuss that form in detail in our final port on how to file GSTR-9. Column by column so that we can file it easily for the financial. 2425, I will start off, friends, go directly to our GST portal where we will file our GSTR-9. After logging in, this will come to our dashboard. In the dashboard, under Services, we have the option of Annual Return. After clicking on Annual Return, our page will open where he will ask us the financial year. We will proceed further by selecting Financial Year 2425. There are two options, online or offline. Your website will open here. This is where you need to enter the data. Side by side will be saved in real time. Downloads is available in the main menu bar. From the download option, you will download the utility. Remember to have the latest version whenever you upload it. For offline, you have to generate from it, and here you will upload it again from the same column, both online and offline. Now related to the context of this video, we understand all the particulars of online mode. The same criteria will apply offline as well. After this, he will ask, are you filing nil return after online? We had just understood the concept of nil return. What is the importance of nil return? No. We will select pay no pay here and proceed further. Now our summary will open here. This is why I have reflected the entire GSTR-9 for you. Here. First of all, you can download the system generated GST or 9 summary from here. This will be done in PDF format. What do you need to do basically? All you have to do is reconcile your books of accounts for GST or 9 and what you have filed. What is the need for redemption? So I have my omission error, anything. It was a clerical error, I want to find it out. If anyone is left, I have a last chance for that particular financial year by which I can fix it. Now from table number 4 to 8, we will discuss each column in detail. The 19th column is just our late fee and payment, which will be activated only if you file late. Advice, if you file on or before 2 dates, it will not remain active. Let's start with table number 4. Table number is 4. Our details of advances, we had received any advance. We have covered all the topics in the discussion. That is why the basic concept was taken earlier so that understanding the form became easy. inward or outward supply during the financial year, i.e. I did in financial year 24-25. These are the details of such inward, such outward, or such advances on which I have paid tax. In table number 4. Now first of all, let's talk about B2C, B2C, that is, does registered person, a registered person becomes a customer, or B2C we call it. In such a situation, we had a sale during the financial year. Now, what becomes its data source? If I refer the data source to DS, then the data source will become ours, GSTR-1. In GSTR-1, we write our table number 5 and table number 7. Data from columns on B2C and B2B supplies is sourced. E deals with exports covered under tables 6A, 6B, and 6C. These also include advances where tax is paid but invoices aren't yet issued, detailed in table 11A. Advanced transactions follow PF entries. The business has been sold, i.e. Gastan to Gastan. Ultimate customer who had Gastan, registered person to registered person. In this supply, we have supplied Echo supply, that is, through Echo, if I am an online seller somewhere and I was selling through portals like Amazon, Flipkart, Meesho. So its data will come here, but RCM inverted data will not come here. The data source that will become for GSTR van is my van's if or van's is our table number 4, and here pay credit note and debit note. We have to separate their reporting. B2B inverse. Then there is our zero rated supply. Now there is zero rated supply. Our export, where I have made payment of taxes, accept supplies to ZZ Special Economic Zone. Not the details of the supplies that have been made. Only the details of the zero rated supply will come to us in the department. And in E, we will cover our dent export now for these 3 CD, and for E is our table number 6, A6B, and 6C. From where we will fetch the data, our GSTR-1 IFFF4, and next time our if advance on which tax has been paid but invoice has not been issued to us for table number if in this column. We have received the advance but we have not issued the invoice yet. The details of this we will write here in PAF, and we will take its data from table number 11A. Where we report the advances of our 1 IFF for 1A. Now this inward supply where we are talking about RCM, here all our inward supplies will come. By all these word supply, we mean including advance net of debit note and credit note, and we understood the concept of that. The recipient who is in RCM pays tax instead of supplier including all import of services. We will put here the data of RCM. We will take it from 3B, where we used to mention inside the D row of 3.1, and at the same time we used to make the claim by making payment in the same return. On the supply on which e-commerce operator is required to pay tax, section 9.5, including amendments if any e-commerce operator to report these e-commerce operators like Amazon, Flipkart have to report them. And that was our application from financial year 23-24, whose data we will fetch. Our total will come in table number 15 or 15A to H. A to G Y, that is all the total from here to here will come. Our or H, then our credit note is issued in respect of transactions specified in B to E above. B to E above means B to B. If there is any credit note related to export, SEZ and deemed export, then here we have to write their details, but we have an option here where we were talking. In the above days, we can enter net of credit notes and debit notes, and we will get the data. From table number 9B to our 1I, 1FF, and 1A, from here we will fetch the data of the credit note. Similarly, we will also extract the details of our debit notes from 9B. We have the option of B2B export, B export, SE, ZE, and DM export of the above entering data. In the same, we can fill the details of net of credit or debit note above. Then in row number K, supply tax declared through amendments, i.e. we filed amendment in Van A, due to which we have increased tax liability plus.
I will show that here, and the details due to which there was reduction in my tax liability will come in my L. M and N is our subtotal. M is our subtotal of I to LI, was our credit note, debit note, or amendments of all these. Subtotal, our further column number in north and north, became our H plus MH, was our subtotal of A to G1, and then we got subtotal of I to L. We have now added both of them. So the supplies that came to us, such supplies on which I had paid tax, was in fourth, outward supply, inward supply, such work on which I came by paying tax. In fifth, there are details of outward supply, just outward supply made during the financial year on which tax is not paid. I did not pay tax. The first among them is zero rated supply without payment of taxes. Without payment of taxes, that is, I had filed the allot in my RFD 11. Just now we had understood the concept. All these buses now here in zero rated supply, we will cover those invoices where I paid through the allot.
It was exported, but the payment has not been made of IGST, and the details of which we will fetch from table number 6A from our GSTR-9. Then there is supply to SEZ without payment of taxes. All the details there are in it are without payment of taxes, and we put the details of SEZ in our 6B for me. The supplies on which tax is to be paid by the recipient on RCM. Now here on top of RCM, if we have paid tax, then we will show the payment details here. Debit note and credit note, we will report their details separately. Then there is supplies on which tax is to be paid by e-commerce operator S on 9.5 like Amazon. This was applicable to us from 2024. Now we have to report them here. This is followed by nil rated and non-GST exam. This is our table number 8. We will take 1, 1 and 1, 1. From here we will fetch this data, then all the total will come. Then credit note issue in respective transaction A to F above. Now any credit note related to these had been issued. A debit note has been issued. We had made amendments due to which my outward supplies, which were without access, if there has been any increase in them, it will come into J. If there has been a reduction, it will come into K. So this will be our turnover on which I have not paid tax during the financial year. Then both the tables 4 or 5 will be set off and merged. Then our turnover during the financial year will be table number 6. During the financial year, how much I took ITC in just 24-25, what happens now? When we file 3P, where we have table number 4, the same summary comes during the financial year. There is also some ITC, which is of the previous financial year. There is an amendment from this year. Here are 2 new columns. So, the first amendment in table number 6 is ITC of any presiding financial year valid in the financial year, which is included in 6A. When I was filing 3B, ITC of some previous financial year also came there, so I have to report it here. The A part of table number 6 above has become non-editable. It cannot be because it has been auto-fetched. Now a VAN that has been inserted out of this total, if there is any ITC, which is of the previous financial year older than reclaimed. The reclaim part is not here. It is going to come in the 6th hatch. The amount of ITC reclaim is given inside the provisions. Then the reclaim part is stuck from here. We will discuss it in the hatch so that we can extract our net ITC during the financial year. What happens? I assume that if there was any invoice pending for my financial year 23-24, then I have a specified time period to claim. I can claim the ITC of the previous financial year within the specified time period, i.e. 30 November. What happens now? Now 2 cases are formed in this. Case number 1. I made any ITC claim in previous financial year, May 23-24, plus I reversed it. After reversing, if I claim it in this current financial year, then I will enter its data. HQ, and this is our roll number 37 and 37. It comes in A, we have all discussed this now. Order number 37 or 3078 order number that we go in our case number 2 if I had claimed plus reversed in any previous financial year and if I am reclaiming it. Even then I will report here table number 6H will remain for my purpose where I am recalling other than rule 3737A or else.
In 373782, our net ITC AVAT for the financial 2420. Then our B inward supply here, we will take aggregate of ITC. Now in ITC, we will supply all the inward supply. We will exclude RCM Wali and we will include supply of service from SCZ. This will come from our 4A5, this will come from our 4A3, and this will come from 4A3 of GSTR-3P. And these two are our respectant 6B again. Import of goods including supplies, frames, SEZ. This will include input and capital goods and we will fetch them from our 4A1. Data is now imported from the service. And from ITC, from ISD, our concept from 4A2 and 4A4 will come. We are reading it from behind. Here our difference will come. Transition credit through Transvan or trans to Transvan, and trans to hours was coming when this was implemented. GST. So in previous taxes where pay sales tax excise was running, our transfers and transfers were being used to carry forward the ITC that was eligible ITC from there. Then ITC achieved through ITC 01, ITC 02 and ITC 028 order, then 3B or transform. Now what is this ITC? ITC 01 becomes ITC 01. When we apply, I get a credit for the amount of tax I paid before the eligible date. In ITC 02, when I do sell and merge, my ITC remains standing. If the electronic rented laser is unutilized and available, I will get it transferred. When I have multiple registration in ITC 02 and 2A within the same state, I fill 02A for transfer from one place to another. I will get their details here. Then there is subtotal and total ITC avail during the financial year, table number 7, MR details of ITC reversed or ineligible ITC during the financial year. In these rules and sections we had covered all. All the concepts are the same. 373783, 3839. All this we had covered.
So any ITC related to them that we have reversed or these are eligible, all the details of that will be covered in our table number 7. Then our table number 8 or ITC related information in which ITC is to be on S. Now in the 2B1 we will take all credit means aggregate credit.
In which the invert supply where the pay was RCM will not be included. Supply from SCZ will come. We will not consider our import. Now our data of 2B which our supplier had filed in GSTR-9 will come here. Now on ITCS table number 6B above. Now if we have to make any changes in 6B, then we will go to 6B. No amendment is possible from here. So 6B was our inward supply where pay order then import inward supply, this liable to RCM included services from. If someone wants to change the figure of ITC, then this edit cannot be done here. We have to change only after going to 6P. AB ITC on inward supply order, then import. We are not taking inward supply liable to RCM either. Then there is the services received from SCZ, which we are taking receipt during the financial year, i.e. 2445 I had received, but only in the next financial year, i.e. the current financial year which is running, my 25-26 I have availed in it up to the specified period. I can claim ITC till 30 November 2025. I will enter the details of those invoices from 2445 in C. Then our difference will come. Then ITC available but not availed. I had credit. Ether cash or credit but I did not avail him during 24-25. Then I will enter his data here and I was lying in ITC available but ineligible credit. But he is ineligible. I cannot use it. So much credit data I will show here. In the case of IGST paid on import of goods, including supplies from AC set import, my ITC will come here. Then what we are doing, IGST credit avail on import of goods during the financial year 6 EC will come here. Then there is the amendment in Hatchvan. This is our addition for this financial year. Hekvan says that if I am doing any IGST credit avail, import of goods in the next financial year, if I had done its credit avail in 25-26, then here I have to enter its data, then the difference will come. ITC available but not availed on import of goods equal to I, which was this difference. Now it will come in J. How much was the total in our ITC available? I had the total GI, GST as much as I had paid in the case of import of goods, and how much did I use in the same year, and how much did I use in the next year? I used 40 out of 100. If you use 30 next year, then I had it available but not available. How much has become 30? Then it will come here. This is our total ITC lapse during the financial. Now, which ITC in 24-25 I could not avail? Such an ITC which out of the total was available. But I did not avail. Such ITC comes again. What our F has done. ITC was ineligible, which I did not do, which was ineligible, and out of the total import of goods, I had reduced the amount of the current year, and what I claimed in the next year, it was left. All three will come together. He became my laptop. Now I will not be able to avail this ID for this particular financial year. Now in 24-25, when I filed my GST return, how much was my tax? How much did I pay through cash? How much did I utilize ITC? This includes my tax interest, late fees, penalty, or order. Now from this year, these columns have become our new inserts. First of all, our forward and difference of total tax paid between tax payable and tax paid.
If there is any difference in how much it used to be made and how much it was done, then it is also reflecting from this year. So these two columns are our third amendment which has come. We have inserted 2 columns in table number 9 for this financial year.
Then let us talk about table number Pando 1 or 30 10 or 11 is ours, where I am showing supply or tax declaration through invoice, debit note or amendment, due to which my tax liability is increasing. Cup particular of a transaction of a financial year declaration in the return of the next. Let us understand the period till the specified period 24-25, my financial error for which I am filling GSTR-9. Next financial happened my 25-26. Now any such transaction in which 3 things are covered, first of all the invoice, then our debit note. And then there's our amendment. Now these are the 3 things due to which my liability was increased, i.e. there was such an invoice which was of 24-25. I did not enter then, but 25-26 when I was doing GSTR-1 or even 3. Wherever I paid, I incorporated this invoice into it. In the current financial year, or was there such a debit note that I made this current financial year when I was filing the return, but what was that transaction for? 24-25, the low value of the amendment was shown. Now I am showing more, due to which my if liability is getting plus was increasing, and I have reported this year. Payment is done. So I will show here up to specified period means till 30th November 2025. So I will show the data here, table number here. Table number 10 is now available. What will I show in tax reduced through amendment credit note 11 now? I had made a supply or made an amendment. And the credit note due to which there was a reduction in my output tax liability, then I will also show that here then these my 9 and 9b which we increase in when, and Vane will fetch the data from there. Then this ITC which belongs to the financial year but we reversed in the next financial year was the ITC of 24-25. Because I reversed in 25-26, then its details will come here. ITC of the financial year availed in the tax financial year was reversed here. In the current financial year, I reversed it in the next financial year. Now let's talk about the ITC of the current year, but I only did it. If I had done it in the next financial year, then that data will come to me. Then the total turnover has come. Our 5N5N was ours, where I had shown the total outward taxable, my IN-N. Where we had paid taxes and without taxes we had netted off, then the net of total 4 or 5 came out in our 5N for total turnover. Then after that we have table number 10. In table number 10, that invoice was included in turnover, that debit note, that amendment, due to which my turnover increased, my liability increased, I paid tax. Then I will lessen 11 where my reduction was done. Because it was of last year, I reduced the transaction of last year and lessened it. Last year's transactions were shown this year, added it, and the total of our table number 5N was coming. So the up turnover of the total financial year will become mine. 5N plus 10 and 11, this became my reporting. I mean, if my tax audit had also taken place, I would have had to report that much. That's what should have come. What was the ABE differential tax paid on account of declaration in table number 10 and 1110? There was also a transaction last year due to which my output ability increased. 11. What was the reason for such an amendment or credit note due to which my output tax liability will be reduced? But the transaction was last year. Does the difference between the two make my tax payable? Did I make the difference or not? Which is this column. This is another of our amendments. The addition has taken place in table number 14 of this column since this year. A column was inserted. If a difference is made by paying minus the table of difference, will I have to pay it? Then table number 50, particular of demand and refund if any demand was made against me against my GST number by the department, or if I had done any export or for any purpose. I have claimed the refund, so here the total refund claim. Now our total of all these will come in the total refund claim. I had filed the application. Now out of the refund, if I have any sanction or I have been rejected or I have pending any of these cases, the total was as much as I applied. Now my total of all these will come in the total. And what do we have to pay attention to in pending? In the pending, we have to see that the acknowledgement was generated. And out of this, we will exclude those who have received a provisional refund. The provisional refund that we may have received will be removed from it because it is no longer pending. The more actually is pending, the more we will show. Now the total demand of taxes as much as the educating authority. Demand will come in my EF and G, total demand in E, then in F as much as I had paid against it, and as much as my painting is table number 16 is our supply received from composite taxpayer. Deemed supply by job worker and goods sent on approval basis. Now the taxpayer who is in it will come to us. From our table number 5 will come table number 5 of 3B, of our 3B, and this dim supply under section 143. Now what is this? This creates a scenario between the principal and the job worker. Then this goods sent on approval basis, not return. I have sent goods on approval basis. If those returns are not received within 180 days, then I have to report here. Keep in mind that I will be 17. HHNY summary. As soon as I enter my HSN number of our outsourced supply goods and services, these details will come here. If you are using any accounting software, it will automatically generate instructions and you can also prepare them in Excel. This is our outbound supply and this is our inbound supply. Here we will summarize HSN-wise. Here we will summarize HSN-wise. Now we have discussed till table number 819. Our late fee was that if I am late, then it will be activated. This was the processor, our friends, the commission to fill GSTR-9. I have tried to explain to you to some extent. It must have reached you what is the basic concept related to GSTR-9. The form, we have explained in detail. Any query, suggestion or feedback related to the content of this video, or feel free to come in our comments. Thank you friends for watching this video.